And that's
Yeah.
what we've seen here over, the last several months. It's kind of just ground higher and higher, and people get a little disgusted. It's going sideways. Oh, it can't get above 35. Oh, man, 35 is it. Oh, 35, 35, 30. And then all of a sudden it's 37, staying there. And then, so this is what I expect.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. This is Financial Survival Network. I'm your host, Kerry Lutz. You're watching myself and David Morgan, themorganreport.com. When I want info on silver, when I want to really know what's happening, there's only one person I think of, and that is you, David Morgan. And hey, what can we say about silver? It's now trading the highest it's been since 2011. We broke 40. We even broke 41. And I know you're of a conservative bent, but what's your gut telling you? Is this the real deal, or are we going to get a head fake again?
Well, I'll let the market decide. I mean, I'm a big believer. I've said so many times that the market knows more than any of us. But having said that, all I need to do is see a couple closes above 40, a couple more days in a row, and that's confirmation that it's a breakout. I do think it probably is. And there isn't much upside resistance above the 40 level. If you look back in history, the 1980 high was intraday, and the 50 I'm talking about, or 52.50 was, I think, the close on the Chicago exchange. Regardless, that was very momentary. And then in 2011, when we didn't quite hit 50, but we did trade above 40 for a month and a half, and another couple months, if you look at the chart. So maybe, I don't know, 3.5 months. I haven't studied it to the day, but it isn't a lot of
Mm.
trading that went on above this level. So now we have to build a base, probably, or we could shoot up. But I'm thinking we're going to kind of, hopefully, in my opinion, stair step up. And the reason I say that is you really don't want a parabolic move at this stage of the last leg up in the precious metals, which means if it goes parabolic, it's like throwing a tennis ball in the air. What goes up must come down. But if you build a base, now you've got support that goes a little higher, and build another base, you have support that goes up again. And I call that grinding higher. And that's
Yeah.
what we've seen here over, the last several months. It's kind of just ground higher and higher, and people get a little disgusted. It's going sideways. Oh, it can't get above 35. Oh, man, 35 is it. Oh, 35, 35, 30. And then all of a sudden it's 37, staying there. And then, so this is what I expect. I don't feel that we're going to get to 50 this year, but, I'm happy if we do. But I'd rather see what I just said, that we kind of just grind up over, current day to the end of the year and build that base and get more and more participation where people get used to the idea that silver's at 40, 42, 43, 44, 45. It's 45, 45, 45, and it keeps going. And of course, it's up and down, as we both know, but generally moving higher.
Well, I feel confident saying it's a breakout, although you know a lot more than I do about it. You got a few more years in this space than me, a lot more years. But I'm looking at the price of gold today, broke 3,500, 35.34, according to Kitco, if you can believe what they tell you, which generally spot market is pretty spot on, no pun intended. And silver broke that 41 in the access market. That was something I wanted to talk to you about. But right now, as of the 10 a.m. fix, $40.83. Now, last Friday was the last trading day of August for metals, and that's always a significant day. And silver didn't make it over 40, and one could aver or allege that the powers that be were painting the tape. But then in the access market over the weekend, on yesterday or the day before, it broke $40 without a hesitation. So, which makes me wonder: is the COMEX losing its ability to control these markets?
Well, I would say somewhat. I mean, first of all, there's so much controversy within the metals community. I mean, there's no manipulation, there is only manipulation, and then there's people like me that have a differing view, and that is you cannot manipulate the long-term trend.
Mm-hmm.
But within that trend, you certainly can manage the price from time to time. And that's been proven to my satisfaction by what Adrian Douglas did at GATA. I reread his paper on it. And what we did in the Silver Manifesto, talking about the Sharpe's ratio. But I don't want to go too far down that path. You asked a direct question, let me answer it. Certainly it's possible. Whether they did it or not, I don't know. What I do know is that in the access market is where most of the time you'll see unusual trading activity in terms of volume. It's a smaller market, and anytime you put a large sell on anything, be it a stock, be it a commodity, be it used cars, be it houses, anything where you say, well, we've got this inventory, we want to dump it all, sell everything now, the price is going to drop, especially if you do it in a thin market, which is the access market, because orders have to match. So if you've got $42 silver and you get an abnormally large volume, like 5, 6, 7, 8 times the normal volume, how do you match those orders? The answer is you don't. I mean, you've got to go from 43 maybe down to 38 before all the orders line up. And some of those orders, I would tell you confidently, are not participants that are overseas. They're people on the other exchanges that are waiting to catch their own short sale to close out their position. This happens all the time. People don't think that way, but that's exactly how it works. So
I love it.
There is that part of it. I will not back down on that fact. I mean, spoofing, the thing about the manipulation goes so many directions, so I'm on a roll. But, if you go to somebody that's more established than myself, and you absolutely go into the law, let's say, what was written as a verdict, you will not find the word manipulation. You'll find the word spoofing. So you could argue as a lawyer, and I know you have a legal background greater than mine. I have contract law only. I got an A in the class for whatever that's worth. But the word manipulation isn't in there. So I could go in the court and say, there's no manipulation. Here's all the proof, Your Honor, and underline all the spoofing. Well, spoofing isn't manipulation. So you get into that semantics argument, right? The point being is spoofing has been proven time and time again. I consider it to be managing the market. So I'm using a different word, Your Honor, and life goes on. And then you get the argument, and I think it's a justifiable argument. Well, it happens in all the markets. And that's probably true. I mean, you've seen it happen in the wheat market. You've seen it happen in the oil market. Oil is about as managed as the metals market as far as our data shows, or the data shows us. Let me reframe that. And this isn't like new. I mean, markets, read Jesse Livermore's book, I mean, this is not new to markets. When people can get an edge over each other, insider trading, the whisper thing, seeing the crop report before anyone else. I mean, this is not like, oh my goodness, it just started, or it started in 1979 or whatever. Come on. This is human nature. If people can get an edge on another, they're going to do it. So, right. I mean, there's some that won't.
Here, I'm shocked.
Yeah.
Yeah. So, but yeah, in the long run, but if they could keep doing it in the short run, eventually it will catch up to them. But what is the short run? Is it a week? Is it a day? Is it a month? 6 months? 6 years? The game's been afoot for a long, long time here, whatever the game is that they're playing. And, intelligent minds can have differing opinions, but certainly spoofing prices. I mean, JP Morgan only paid $920 million there, and they didn't protest too much about it. Maybe there is a plan, maybe there's not, but for our purposes here, it's not really relevant, is it?
Well, again, if you go back to my premise that you can't manage or manipulate the long-term trend, I think if you keep that in mind and also keep the right amount. I think one of the problems with a lot of the metals heads out there, and Maybe I misled people. None of that was ever deliberate. I always said basically 10% is enough for most people, 20 if you're aggressive. So that means you got 80% in whatever, real estate, the stock market, private business, art. I don't care. You don't want to really load up too much in the metals. And there's some, such as myself, Mike Maloney, that really are overweighted, but it's our specialty and we're comfortable there. But most people aren't comfortable, especially when they see, Tesla taking off, or their brother-in-law's got a rental apartment that's doubled the rental price in the last 5 years. So do it. The reason I started what I did was I felt and knew that a hedge was required going into a monetary crisis. But I didn't know if the crisis was 10 years out, 20 years out, or 30 years out. And I mistimed it. I'll admit that. I thought it would be sooner than it is now. But we're really entering into the place where almost all investors are waking up to the fact that something isn't right in the monetary system. And we're just starting to see an exit out of, or a rotation out of stocks are the only place to be. They only go up. I'm just going to keep doing the index trading into, you know what? I like gold, or I want some gold, or I want to move some of my profits into gold. And that's already started. Of course, it started a few years back with the central banks, but now it's starting to move into the top tier, let's say the elites that have, gobs and gobs of stock that are selling off, $1 billion worth of their shares and quietly moving into precious metals.
Yeah, I think there's a kind of an inevitability to it all, don't you think?
I do. I mean, this cycle has been gone through time and time again. It's just never been a worldwide phenomenon. I mean, no one knows that better than, Martin Armstrong. I mean, he knows it better than I. But, in other realms, you could have escaped to a different country or a different currency and kind of protected yourself. This way, there's really no out of the US dollar. Yes, there's the BRICS, but they really don't have an official currency. And I don't think there's a way to hide in the currency. Marty may disagree with me, but I think gold, as he says, it's not necessarily an inflation hedge. It's a government hedge. When trusted government breaks down, it's breaking down on a global basis. It's not just, the constitutional republic that we purportedly have, which is broken down years ago. You look at democracies, you look at, socialist systems across the board, you're seeing people that are disgusted with their leadership.
Yeah. Yeah. Well, the game has always been the same here. And I just think it's interesting that we finally reached this point. I mean, I felt like we were coming here back when silver broke $32. That seemed to have been a key resistance point, 32.50, broke through there. And then it played around here for a good 6 months before we got to this point. I think it was back in May when silver, or maybe April, silver hit $32. I don't remember off the top of my head, but yeah. So resistance ahead. What's the next resistance point? It's got to be $50, right, or $49.50.
Yeah, and that's a psychological resistance. I mean, 1980, it stayed there for minutes. Some of the floor traders say an hour or so. You go back to 2011, it actually didn't even hit 50. It hit the high 40s, stayed there momentarily, and it lasted just a few days. So it's psychological. There'll be probably algorithms that say, sell it at 49.22 to 51.83, whatever's in the computer. And I think that will happen. Now, that's a guess. It's an educated guess, but it doesn't really prove anything. I do think it'll stall out because of the psychological resistance, but there isn't really any true resistance there. I mean, as far as, it's, having days and weeks and months at that level and never getting beyond it, which we have seen and overcome, as you outlined. So really, I think it's a psychological barrier only. I do think it'll take place. I think it'll be momentary, meaning, days, weeks. I don't think, a couple months maybe. And then I think we'll get through it the next time. And the next time we do, stay there under the Morgan rule 3-4 days in a row on big volume on close only, we're probably off to 55, 60, 65. Who knows? But it will be very interesting to see what happens once it breaches the 50 level and we start seeing a 50 handle where it's not 3 days, it's 3 weeks, and then it's 3 months, and then it's, whatever. So looking forward to that day. It is ahead of us as far as I can ascertain. Time will tell.
I bought most of my silver right after the crash, after the collapse, when metal markets really got wasted. Gold was trading as low as 700. Premiums were up. Premiums were as high as 10%. And I bought silver right around the same time for $8 to $10 an ounce, sometimes a little cheaper than that. So I've never really ever thought of disposing of my physical. At what point? Because, people get greedy, and just like people like me who sold their Bitcoin at $600 and thought they were cleaning up, we don't want to be in that situation.
It's a tough call, Kerry. First of all, David Smith and I wrote a book, Second Chance, and it talks about how to take profits. And there's several ways to do it. One thing that I think about, and I don't think it's voiced that often in the community, and that is, so as long as we're in a dollar system, I put that in quotation marks, not a, definition of a dollar, which is a weight of silver, but in the parlance of a Federal Reserve note. You've got to look at the history that we have in modern times. The near term is more important for trading than the long term. So gold's out of the ground, all-in sustaining cost, we can make a round number about 1,800. If you double 1,800, you come out with 3,600. So right now, gold is trading at about double what the AISC is. So if we apply that same metric to silver, the all-in sustaining cost somewhere around 26. I'm going to round it up to 28. Double that, that's 56. So we get to 56. We have the same metric that we do in gold, meaning the all-in sustaining cost is 2x what the price is 2x what the all-in sustaining cost is. Now, if we're just still trading in dollars, which we probably will be, or Federal Reserve notes, how high is it going to go within that realm? In other words, unless you get a breakdown, which you can, of one or two things. One, you could lose faith in the dollar altogether, which is happening more and more rapidly all the time. And that means converting those Federal Reserve notes into hard assets, especially the precious metals. You will push the price higher and higher, could go to absurd levels. However, that could be a momentary event, just like it was in 1980 and 2011, especially if there is a new monetary system that's right around the corner, meaning they're going to reprice everything in the new digital currency. So I don't want to get too wrapped up in the $100, $500, $1,000 silver, whatever some of these numbers are out there. I want to take a more practical view of what's the economy doing. Are we in a blow-off inflationary mode? Are we looking at something more of a debt liquidating liquidity squeeze where the bond market gets forced lower because interest rates take off on their own, regardless of what the discount window is set up by the Federal Reserve Board? And all of a sudden, people can't buy groceries or pay their electric bill. What are they going to do? So what I'm saying is I'm not ruling out a deflationary type of scenario that could be temporary before a hyperinflationary blow-off, or it takes hold and it goes that direction, which means you've got to watch the market closely and price it accordingly. So let me do a real quick example. Let's say the S&P goes from 6,400 or thereabouts down to 5,000. So whatever that is, 30% loss. I can't do that math in my head that well. And then gold goes to 5,000. Now we got a 1-to-1 S&P to gold. Well, now that piece of gold hasn't really changed. The price has, but what does it buy? Well, it buys a lot more companies than it used to. What if it buys more housing than it used to? What if it buys more automobiles than it used to? And that's what I'm looking for, because people want to get a numerical price. But as the inflation, or depreciation is a better term, of the dollar continues, you're looking at a shrinking unit. You don't really know what the price is, meaning it's the value, which means you got to compare it to other goods and services. So let's say, for example, we do start to see a lot of backing down in the equity side. And even the bond market starts to have more and more problems. Now, what do? Well, we evaluate what the value is of those metals and how much they've appreciated against all their asset classes. And if that's the case and the price remains the same, the value has increased. And now what do? Well, I think if you use some logic, you say, you know what? I'm going to take some profits here. I plan to filter out on the way up, not get too greedy. I know from trading futures for a living how difficult it is, and to always sell in the strength and not say, oh my God, I sold it at 55 and today it's 60. Well, I didn't sell it all, and it's still selling in the strength. And I still have some dry powder. I might sell some more at 60 or whatever, but there's a plan or plans outlined in that book. To think you're going to get the very tippy top, that's an amateur's game. You don't want to play that game. You want to be a professional. You want to get out within hopefully 20% of the top. And if the top is 100, 20% of that is 80. So if you got out at 60, 70, 80, and it went to 100, and you got some out at 90, let's say, it peaks and it starts to fall 90, 80. You sell off the rest. You're convinced that the peak's here. Everybody's selling. You call all the dealers. I'm selling. Well, we're going to discount you. Discount me? What do you mean? So it's at 90. Well, we've got so many sellers. We're discounting you to $80, which is what happened in the 1980 run up. The dealers in LA bid back to about 35, even though the futures price was hitting 50 momentarily.
Yep. Well, I just remember what Bernard Baruch said, that he got rich letting the other guy make the last 10%. And, you can't expect to get out at the top here. You're a professional. You've been doing this your whole life, and you're saying you can't get out at the top. How does that work for me? It can't be done. But on the other hand, you might always want to keep a core holding, right? But your purchasing power goes up so much that you can buy other assets that historically were overvalued for undervaluation. That's what you're saying, right? So if you can buy a house for 1,000 ounces of silver, say, just as a for instance, maybe you do that, right?
Right. And I think there's a legacy, you listen to Jim Rickards, and a lot of respect for Jim. And, what are the legacy investments? It's land, gold, and fine art, or collectibles. So, most people are out of the collectibles thing. That's for pretty much the very rich. But gold's accessible to almost everyone these days, and real estate. And so I would definitely, for legacy toward my kids and my granddaughter, pass on some precious metals. I'll probably never sell it all, but certainly when it gets overvalued relative to other things, again, I say overvalued, maybe not correctly priced in the imagination of, some people. So when you get to a hyperinflation, the price is irrelevant. In Zimbabwe, the $100 trillion bills never hit circulation. The currency had failed before those bills were allowed to circulate. So, what good were they? They weren't. They're worthless, even though they had that large number on them.
Mm-hmm. So, I guess, the question on everybody's mind is how high can it go? And your response is, doesn't matter. You have to watch it, and don't be greedy. Take your exit when it's time.
Yeah, I just believe that you got to be of sound mind, and you've got to, be satisfied with what you get. As the late, great Jim Dine said, love what you get. It's all you're going to get.
Yeah, I couldn't agree with that more. In fact, I've more or less lived my life that way. You got to want what life wants for you, because you have no control over what it's going to give you anyway. So you might as well be happy with what you have. A little bit of philosophy, but it certainly happens with the markets. But it is a nice feeling when you see that your stack is appreciating in value, and it's more than doubled over past year and a half. That is a good feeling.
Oh, absolutely. You look at, how poorly silver has done. If you go to gold, from the last 25 years, it has a CAGR, compound annual growth rate, of over 10%. That's better than the stock market, which the S&P is about 8%, and the housing market's about 6%. Now, silver hasn't done as well as gold. It's somewhere near what the S&P has done, but still, that is a compound. Now, the problem is people say, oh, wait a minute, Dave, what are you talking about? I'm talking about the compounded average growth rate over that time period, but that doesn't mean every year it does that. Some years it goes up 30%, some years it goes down 30%. But the idea of the metals especially is it's preserved wealth preservation. It's there forever and always. And because of that, if you hedge a right amount for you, 5%, 10%, 20%, whatever it is, that in the long run is going to do what I just outlined. And this is something that investors actually have the mindset to do it, whereas day traders, swing traders, traders really don't have that mentality. That's okay. It takes all kinds to make a market. I have nothing against them at all. They just have a different view of the markets and how they approach them. And that's fine. But if you're looking at the market as a speculator and yet you're acting as an investor, you have cognitive dissonance. Oh my God, I bought the silver at 30 and now it's 25. What am I going to do? What am I going to do? What am I going to do? Well, if you bought the right amount, you're probably just going to sleep soundly because you know if we go into a currency crisis, you're going to do fine. And if we don't, you're going to be okay, especially if it even stays below where you bought it for in terms of Federal Reserve notes. At least, one, you haven't lost everything. Two, it has some value. And three, you should be happy in a way because you're hedged in the worst case scenario. But people that go all in and go for the wrong thing at the wrong time and buy the wrong product can woe the day they ever heard the word silver or gold.
You know, I'll tell you a little anecdotal tale here. Back in 2010-11, business was great. I just sold out of my law firm. I was buying all the metal I could lay my hands on, and I got my friend into doing it. And he had a lot more money than me. He bought way more. You know, he was sitting on over 7 figures worth. And then his business went under. He got divorced, and he said, you know, I needed to cash in a lot of that. But if it wasn't for the fact that you got me into it, I would have never had that money, because when you got the metal, there's a intense predisposition not to part with it. And it's a kind of forced savings. So he was well ahead of where our entry point was. But more importantly, it was it's liquid, but it's still a pain to get rid of. It's not like sending money from one account to another or selling your crypto off and transferring the money to your account. And as a result of that friction to dispose of his metals hoard, he had it when he needed it. And he was very thankful to me. And I felt like, hey, what did I do here? I just gave you my opinion. You acted on it. I'm no financial advisor, but I'm putting my money where my mouth is. And it really worked out for him. So that is an added benefit to having the physical that most of you out there really don't get.
Exactly.
All right. Well, it's great to talk to you again, especially on this momentous day. And I do think it's momentous because we've got gold making new all-time highs, and we've got silver making almost 15-year highs here. So this is a good day for us. Vindication, validation, as if you needed it anyway, which you certainly don't. Oh, one final thing. The metal stocks, precious metal stocks, they seem to be coming back to life now. What are your thoughts?
Yeah, well, they're confirming the move. I mean, they've been doing well during the summer while gold's really been flat. More and more interest in them. They are really the value plays. I mean, the gold miners were trading as if gold was like 2,200 the ounce instead of 33 or 3,500 the ounce. They're starting to move now. Newmont is the second best performing stock this year on the S&P 500. Think about that. 500 stocks. NVIDIA's edging it out slightly, and Newmont's the second best. Maybe at the end of the week, Newmont will actually be the number one best performing stock on the S&P 500. Think about it, folks. Oh, and by the way, nobody's talking about that. So it's pretty interesting.
Yes, I know exactly what you're saying. Couldn't agree with you more. I've got a modest holding of stocks and some really good ones, but we don't really talk about particular stock names here. If you are interested, you can always send me an email and I'll shoot one off to David. You can get the Morgan Report where he covers a lot of companies. And David, it's a pleasure. If you've got a question for David, myself, shoot me an email, kl@kerrylutz.com. It's themorganreport.com. Links in the show notes. If you go to the site, financialsurvivalnetwork.com, which we're phasing into a Substack site because it's just so much easier to manage, less costly, and it lends itself to writing articles and newsletters. And you'll find it there. But financialsurvivalnetwork.com is going to take you there anyway. David, can't thank you enough. It's so great to reconnect with you. Hopefully I'll see you at a conference one of these days soon.
Great, Kerry. Thank you very much.